Hello and welcome to Commodity Champions, your weekly dose of what's brewing in the commodity space. I'm Manisha Gupta. Let's start off first with what has been this week all about, especially in case of the global commodities and the Indian space as well. Starting with the crude oil prices, and that clearly has been a gainer, where you have seen a weekly and a monthly gain continue for this one. This actually is a third straight week that the crude oil prices are posting weekly gains here, up by nearly 3 to 5%, as you can see on your screens. But it is the precious metal space which has been under pressure. There has been no safe haven buying, even as there have been concerns in geopolitics and political uncertainty as well. The gold prices clearly seem to be shrugging it off, and that's majorly because you have other important data lined up. Remember, the US inflation numbers have been positive, the US dollar is trading strong, and you also have the US Fed meeting coming in the next week. Major cues for this space would come in from there. And it continues to be a weak week for the base metal space as well, where all the Chinese data that came in this week have been in the negative side. Whether it has been the production of metals, industrial growth or investment numbers, all of that has been disappointing. To talk more about that, we are now joined by David Lennox. David, hi, thank you so much. What is your sense really when it comes to the global scenario right now? Because we haven't seen the North Korea missile launch do a lot of damage to many of the asset classes.
Look, certainly if you have a look at what's happened, yes, North Korea has again been provocative in terms of launching another missile across Japan. And again, we've seen the response, let's say, from the Western nations, where it has again been only rhetoric and a war of words, Manisha, as you suggested. We haven't as yet heard any significant responses from the US. And of course, with Donald Trump, when the North Korean missile testing first got underway, suggested that military options were on the table, it would appear as though the ability to maneuver is becoming far and far less so. So we're watching very closely to watch what the US will respond, or how the US will respond. If it's military action, then unfortunately we will see a lot of risk-off trades hitting the markets, and very quickly. If it continues to just be rhetoric, the market's probably already spiked to the missile launch already.
Well, yes, David, you know, the gold hasn't gained at all on a safe haven buying. Would you say that the markets are getting accustomed to what is happening with North Korea, unless, of course, you see more heightened risk?
Look, certainly, yes. We need to see, unfortunately, I guess from this point at some stage, military action, and that would ensure that the safe haven characteristics of gold was well and truly entrenched into the price. At the moment, as I said, it's really at this point only rhetoric that we're hearing. And as long as that continues, the market has become accustomed to, unfortunately, North Korea launching missiles and the West firing words back. It may change at some point, we hope not. But at this point, you have, as you said, Manisha, seen that predictable increase in the safe haven price of gold. It's not rallied strongly. It's still below the 1350 region. So we would suggest that the market's expecting no further activity on the current missile launch.
So, David, what is your sense now? Where do we see the gold prices headed from here on?
Look, certainly we believe that the US dollar does continue to be the main driver of the gold price going forward. The physical market in terms of demand and supply have unfortunately not reacted as we would have expected given the lower priced gold environment that we've seen from the heady days of years gone by. We've seen a slack demand and we've seen a steady continuous supply of gold coming on. So that's kept that particular physical market out of the question. It leaves only the US dollar. And whenever we've seen the US dollar weaken, we've seen the gold price rise, and vice versa. When the US dollar's risen, we've seen the gold price fall. So that leaves, unfortunately, the geopolitical to be the main driver of the sudden surges in the gold price. And of course, as we've seen with the number of missile launches that we've seen from North Korea, we've seen that surge come, we've seen the rhetoric response, and we've seen the surge die away. So we'd expect to see the same for the current missile launch. And if the US dollar continues to weaken in light of that, then we would see the gold price rise.
And David, it isn't all about the geopolitical concerns. It also has to do with the China data that has been weak across board, whether it was investment or production. How do you look at the metal as a sector, and would you treat this correction as a buying opportunity?
Look, certainly, yes. If you have a look at the China data that was released just overnight, we saw the industrial production and their retail sales both came in less than expected for the month of August. However, both were still higher than the previous months. So from that point of view, China does continue to expand, but unfortunately not as we were expecting. So that has put some concern back into the investors' minds regarding China's appetite for commodities going forward. And of course, as soon as we see that happen, we see that correction in the commodity prices as we're seeing unfold at the moment. Again, we've seen that slightly higher US dollar, which plays into the hands, unfortunately, of the commodity prices as well. And when we've seen that US dollar rising, we've seen commodity prices dropping away as well. Add the two together, and you can see a significant a significant headwind for the commodity prices. And we have seen those major price falls in nickel and copper, especially over the course of the last trading few hours.
David, so what would you want to pick up when it comes to the metal space? Is it going to be copper, the construction metal, or aluminum, where China is really seriously cutting capacity?
No, Manisha, I'm sorry, I'd have to suggest that we're continuing to look at zinc as being probably one of the key performers going forward. That particular commodity already is in, we believe, a market supply deficit. And if you have a look at the inventories over the course of the last 12 months, they've been steadily falling, and that would again indicate to us that deficit position. So we expect that to continue into 2018. At the moment, both copper and nickel and most of the other base metals aren't in that supply deficit region, and they also have significant or sufficient inventory supply. So when you add that together, we'd expect to see very little movement in copper or nickel, apart from perhaps these surges that we've seen and then the retracing. But we do expect to see a more supportive zinc price going into the end of this year.
All right. So while zinc is your top pick in the metal space, what is your sense on the crude oil prices? Up 5% this week, trading at a 6-week highs. Are you batting for more gains?
Certainly, if you have a look at our end-of-year price, we are keeping our Brent price at $67 US. We think that when you have a look at what's happening in the broader market, there are a couple of drivers that are pushing it. Firstly, the August data that we saw coming out from OPEC suggests that that organisation is remaining within its 32.5 million barrel ceiling. So the market's becoming more and more comfortable with that compliance issue. And as that continues to expand and compliance remains comfortable, then we'd expect to see the oil price start to rise. We're also hearing that 2018, we will start to see a lift in demand for oil as forecasts start to get put together. And that's also going to, we believe, drive the oil price higher come the end of this year. And finally, the Saudis. The next OPEC meeting is not until late in November, and already there's suggestions from them that they are going to seek an extension beyond the end of March for the 32.5 million ceiling. So they seem to be, to us, to be significant tailwinds that could push the oil price higher going into the end of this year.
All right, David, we'll let you go at that. Thank you so much for joining us. So bullish on crude, and zinc is a top performer. Gold, silver, of course, is something that would continue to depend on a lot of factors there. But with that, it's time for a short break. Up next, we discuss about output concerns in the agri-commodity space triggered by a below-normal monsoon. We will have with us Vikram Udeshi, CFO of Giant Agro Organics. Also joining us will be former Agriculture Secretary Siraj Hussain.